Hey everyone, welcome back to Web3 Daily. Let's start with the market. In the past 24 hours, Bitcoin slipped to around 115k USD, down roughly 1-2%, while Ethereum hovered near 3.6k USD, ticking up about 1-2%. Overall, it's quiet out there. Solana, Tron, Doge, mostly echoing BTC and ETH's moves. No clear trend yet, just cautious trading. Some traders are quietly setting up for the next breakout. Stay mindful of market risk. Let's talk about what's blowing up in crypto right now. Justin Sun just dropped $100 million to take Tron public. And the way he's doing it is wild. So here's the scoop. He bought a Nasdaq-listed company called SRM Entertainment. The plan? Rename it Tron Inc., stash TRX tokens on the balance sheet as strategic reserves, and boom, Tron becomes a publicly traded crypto-native company. But here's what really set the internet on. Fire SRM isn't just any shell company. It has deep ties to the Trump family. It was originally spun off from Trump Media Technology Group, the company behind Truth Social. SRM used to license kids' content, but after Trump Media's restructuring, it got carved out and listed separately. One of its major shareholders? Bruce Garelica, known Trump ally and big player in Trump-aligned funds. And now, Justin's bringing Trump's inner circle right into the deal. Donald Trump Jr. and Eric Trump are both listed as part of the advisory team. Eric even posted saying he's not directly involved in the deal, but calls himself a huge fan of Justin Sun. Twitter's torn. Some see this as Web3 breaking into Wall Street Tron, finally getting a seat at the grown-up table. Others are raising eyebrows. Wasn't Sun sued by the SEC? Is this him trying to sidestep regulation? But zoom out. This could spark a bigger trend. From MicroStrategy stacking BTC to funds quietly hoarding SOL and XRP while buying public shells. Justin might have just unlocked a new meta. Buy the shell, list the coin, ride Wall Street liquidity. Love him or hate him, Justin's move is loud, risky, and pure Sun style. And if it works, he might have just opened a whole new chapter in crypto going mainstream. Alright, let's dive into our first major headline. America just officially signed its first federal stablecoin bill into law. Trump signed the Genius Act, which for the first time puts stablecoins into a clear regulatory box at the federal level. The law says, if you're issuing a payment stablecoin in the US, it must be backed 100% by highly liquid assets like US dollars or treasury bonds. No more weird on-chain collateral tricks, and you've got to publish your reserve breakdown every month, full transparency. This is massive. It basically means if you want to issue a stablecoin in the US, you need to run like a bank real assets, real audits, and full compliance. Now, why did Trump sign this? Two reasons. One, the crypto lobby has been pouring millions into DC to get this kind of bill through. Two, Trump's been openly courting the crypto crowd, saying he'll end Biden's crypto crackdown if elected. Signing this bill is him walking that talk. The reaction? Major players like Circle, Paxos, and even PayPal immediately came out in support. Why? Because this law favors them. They've already been building with compliance in mind. Now the smaller offshore stablecoins, they're in trouble. USDC just got a big regulatory moat. Bottom line, this law marks the beginning of a regulated era for stablecoins in the US. If you're building in that space, you better get your lawyers ready. The game just got a lot more real. Let's talk about something big brewing. In Africa, Ghana's central bank just announced it'll launch a national crypto licensing system before September. This isn't some vague idea, it's a full plan. Every crypto exchange operating in Ghana, domestic or foreign, must register by August 15. Real licenses start rolling out in September. Why does this matter? Because Ghana's not small. Over 3 million adults, about 17% of the country will already use crypto, mostly for remittances, savings, and avoiding currency chaos. Their national currency, the cedi, has seen wild swings down 20% one year, up 40% the next. So people turn to Bitcoin and stablecoins to stay sane. Now the government's saying you can keep using crypto but on our terms. You want to operate? Get a license. Register your users, open your books, pay your share. This is part of a bigger pattern. We've seen it in the UAE, in Southeast Asia governments moving from bans to frameworks. Less fear, more control. The message is, we won't block you, but we will tax and regulate you. And already local exchanges are scrambling to get compliant. International platforms are eyeing Ghana as the next licensing battlefield. Why? Because Africa's heating up. It's young, mobile first, and hungry for digital finance. So yeah, it may sound like a local move, but don't sleep on it. Ghana's playbook could become the template for how crypto grows across the entire continent. Let's move on to Ethereum. And BlackRock's ETH ETF is absolutely exploding right now. So get this, in just 10 days, ETH iShares Ethereum Trust jumped from 5 billion to over 10 billion in assets under management. That's faster than any ETH fund in history. For context, BlackRock's Bitcoin ETF, IBI, took 34 days to hit 10B. Fidelity's FBTC took 54. ETH did it in 10. That's not hype, that's serious, institutional money flooding in. Even crazier? Several days last week, ETH had more daily inflows than IBIT. That tells us institutions aren't just stacking Bitcoin anymore. They're starting to see Ethereum as its own powerhouse. Why now? One big reason, BlackRock's quietly pushing to enable staking inside the fund. If that gets approved, ETH holders would earn staking rewards, passively making it even more attractive for big funds chasing yield. But zoom out, this is about more than staking. Ethereum isn't just a coin anymore. It's the rails for DeFi, RWA, and everything else happening on-chain. Institutions are starting to realize it's not just the number 2 coin. It's the backbone of Web3 finance. So yeah, if last year was Bitcoin's ETF moment, this year might just belong to Ethereum. And this wave, it's just getting started. Alright, let's talk about Ripple and XRP. Some major shifts are happening under the radar. First off, big legal signal. Ripple reportedly clawed back $75 million it had previously paid to the SEC. That's not normal. It suggests the two sides may have reached a quiet settlement, essentially calling off the war after 3 years of legal battles. With the SEC taking recent hits in the ETH case, they may be ready to wrap this one up. And the market's reacting fast. 1, there's now a double-leveraged XRP fund trading in the US. That doesn't happen unless brokers believe the legal risk is off the table. 2 hours suddenly seeing serious chatter around a potential XRP spot ETF. Not just from fans, but from analysts tied to Grayscale, BlackRock, and Fidelity. That's new. 3, Ripple just cut a deal with a Chinese payments company, giving them a strategic credit line to expand XRPL-based payments in Asia. Stocks tied to the deal popped immediately. And the XRP's price rocketed past 3 in a matter of days. Bottom line, XRP used to be crypto's problem child. Now it might be the comeback story of the year. If the ETF rumors prove true, it could be the next SOL-style moon mission. Watch this one closely. Let's turn to Conflux. The Chinese public chain just dropped some major alpha. They announced a huge mainnet upgrade coming in August. But the bigger news? They're working on a pilot program for an offshore renminbi stablecoin. Yeah, you heard that right, China's stablecoin, running on-chain. Conflux is partnering with AnchorX and other firms to launch RMB-pegged stablecoins in Belt Road countries places like Southeast Asia and Central Asia. The goal? Use them for local payments, settlements, and cross-border transfers. Why Conflux? Simple. It's the only Chinese public chain with regulatory blessing. They've already partnered with China Telecom on blockchain SIM cards, so the playbook's in place. Now they're scaling that model to the next level stablecoin pilots tied to state strategy. The market caught on quick. CFX pumped over 40% in a single day, jumping from 12 to 17 cents with volume exploding. But this is about more than price. If Conflux can turn this pilot into real traction, China could start building its own on-chain clearing network abroad. That's a direct challenge to the USDC dollar stablecoin dominance. So yeah, Conflux just went from that Shanghai-backed chain to a real player in the global digital currency game. This one's political, economic, and deeply strategic. Keep your eye on it. Let's wrap up with a major security breach. WooX just got hacked for $14 million. Here's what happened. On July 24, hackers phished one of WooX's internal team members and gained access to their development environment. Within 2 hours, they siphoned funds from just 9 user accounts mainly, USDT and ETH totaling around 14 million. WooX responded fast. They froze all withdrawals, promised full reimbursement to affected users, and published the hackers' wallet addresses. They also called in blockchain security firms to help trace and freeze some of the stolen funds. Now, the platform says only a few high-value accounts were hit and their main hot wallets weren't compromised, but still, it's a wake-up call. And it's not an isolated case. Earlier this month, India's CoinDCX lost 44 million in a cross-chain bridge hack. Big One lost 27 million from hot wallets. Centralized platforms are bleeding, and it's spooking users. This attack shows how fragile the setup can be on a compromised laptop, and boom, millions gone. Even for exchanges with deep liquidity and solid reputations. The lesson? Whether you're a trader or an exchange, security hygiene is everything. Multi-sig wallets, device security, permission isolation, this stuff isn't optional anymore. Because in crypto, it only takes one slip to lose everything. That's a wrap for today's Web3 Daily. The market may feel quiet, but the signals are loud. From Justin Sun sneaking Tron onto Nasdaq, to ETH ETFs exploding, and Ripple staging illegal comeback narratives are shifting, and the next cycle is quietly being shaped. As always, the edge goes to those who keep watching. Catch you tomorrow.